Start recording. All right, guys. Seattle's going to kick you guys off. In 3, 2, 1. We're live.
Hey, welcome everyone to the USA Crypto Group. Today we have ProtocolX with us. ProtocolX aspires to develop a large-scale ecosystem that is the future of decentralized finance. Like always, this AMA session is for research purposes only. This is not financial advice, and there's no commitment to the team. With that, I'd like to welcome Neil and the team. Neil, you can start out introducing yourself, your background, and as well as your team.
Yeah, hey, thank you guys for hosting us here. So my name is Neil. I'm the founder and CEO of ProtocolX. I go by Shiblord up on the socials if you see me around there. So my background is kind of vast in a variety of different things. I have some business background through small business in the real world, of course. And then in my crypto background, I started trading back in 2018. Just in a general economic standpoint, I have an educational background in economics, so the finance side of that was interesting to me back then. And then I got my first community manager job in DeFi back in January, before ultimately building up into this protocol that is here now. Everyone on the team has been a heavy investor in a variety of different DeFi protocols, from rebases to nodes to normal tokens to the Shiba Inus of the world, which is why my Shiblord name is what it is. I took a major W there. So our crypto experience is pretty vast. And then personal experience before all of that, I was military as well for 5 years, and I did public service in the real world. And now I'm crypto full time as of this past May. Loving life, body's super happy about it. So I very much so look forward to building and displaying what we have to show up here.
Thanks for that, Neil. You have any other core members here that like to speak for themselves as well?
Yes, so hello, my name is Bran, or in the real world known as Brandon. I am the community manager. As you can see on Neil's screen right now, I am doxed. I joined crypto around 2 years ago. I first dabbled in the scalp trading, as Neil said, the Shiba Inus of the world. I then got into DeFi early 2021. I took my first community management role and my first moderation job back then. Worked within a couple protocols for about a year. I then branched out and looked into marketing and expanding my reach and getting connections within the space, which I'm glad to say I've done successfully. And now I currently moderate a couple of large communities, built a lot of friendships, a lot of groups over the time, and currently community manager for ProtocolX. So my past history is, ever since I've been young, I've sort of had that entrepreneurial mindset. I've studied accountancy and looking to graduate with a majors next year within that sort of side, and also economics as a sub major. With regards to business, I've had businesses from when I was younger. I had a computer engineering company and reselling computer parts, and obviously grown within the space. I've been full-time crypto for about a year now. So ever since I first got into the space, I had a couple of nice W's and was able to situate myself within the space, work full-time on moderation, community growth, advisory roles, and to grow within my space. And now I'm full-time at ProtocolX.
Awesome. Thanks for that, Brian. Oh, Brian. Is there anyone else?
We have a team of 6 total, but I think that's just us 2 in here today. So I'll kind of introduce everyone else that's here on the team. So we have Jack, who's Crypto Cruelty on the socials. He's our administrative manager. He kind of manages the bots on Discord and all that great stuff there. We have Steven, who goes by Walks on the socials. He is our fantastic design, graphics design, and social media specialist. He does tremendous work. So if you see any of our graphics around, including the design of the website, that's Steven's role there. We have Jared and we have Adam, who are lead mods and advisors, and they're kind of, just here to help us have an extra voice, different experiences in them in the real world and also in crypto spaces that help us navigate some certain decisions as we kind of move forward there. As you can see here, we are all doxed. All 6 of us are doxed, and I am KYC'd by Assure, which is our primary partnership for our DEX. So I'm the KYC. I'm going to be the owner of all the contracts, if anything else that comes into play. And generally, I'm just doing that so the onus falls on me, so I cannot scapegoat, Jared one day if something goes south. This all falls on me. This is my business to run it as such, but I have a fantastic team around me to help us every single step of the way.
another set of members on our team who get the credit they deserve, but do not feature on our website. We may integrate them soon, actually. If you scroll to the bottom of our website, you can see that the website was built and developed by Solar. Solar Protocol is another project in the DeFi space. We're not affiliated in the sense of it's the same owners. It's nothing like that. We are partnered with Solar, and they are our official developmental team. They are in charge of building all the contracts, completing the roadmap, and growing with us. The team over at Solar are KYC'd by Tulip DAO. The founder, Kinsyu, is actually a really great guy. He takes full responsibility of all the contracts. Not only do they get internal audited by our team, their team, and also in the future by Certic, they take full responsibility on that side. So we don't have any anonymous developers. There's no any rogue devs, no one to be blamed. All contracts are then transferred over to Neil, who is the sole founder. So there's no one else other than Neil who has access to any of the funds. All of the assets, all the treasury, the ProtocolX buyback, everything is all on a Gnosis multi-sig, all under a 4.6 activation code. So it needs at least 4 members of the team to activate. So there'll never be a time where a rogue dev or anyone in the team would be able to steal any funds. Everything is nice and safe, and all the initial calls are ran through SHIB first. So if any other member of the team was to raise a call, it would have to go through SHIB, in a sense where only SHIB can call the function, and everyone has to agree. If someone needs, funds for marketing, a way to secure that is that if it's not applied by SHIB or SHIB's wallet address, then it doesn't get accepted. So that's another way of taking accountability and growing the project with SHIB being the owner.
Appreciate that, Brian. Yeah, that's actually really good to know. Just ensure the safety for the investors. Now, with the contract that has not been deployed yet, I'm assuming that the audit has not been done as well.
Yes, that is correct. I've already started the pre-application with Certic. We're not going to be posted on their website till I can provide them the contract address. Obviously, they can't do that there, but as soon as we have it, I get it over to him. We pay the Certic fee, and then we'll be able to show in progress on Certic, and we'll get everything audited via Certic, from the contract address to the DEX contracts to the NFT contracts, anything else that we develop. I'm going to put it all through Certic because they are the ones out there that have shown the most, reliability, and they have the most to go off of for a good result. So yes, while they are a little bit more expensive than others, at least they will actually look at the code, because if they're going to put their name and their stamp on something, then of course they have to review it properly. So we will be audited through Certic, but that will not be live at the time of launch.
Perfect. Yeah, that's actually Certic is the daddy of all the audits, right? So I think having their name underneath your belt is actually a good thing. I'm actually really impressed that you guys are have raised, even though you have a goal of 1,200,000, but you guys, I'm actually looking at your pre-sale right now. So the pre-sale is live right now, guys. So if you guys are listening, it is pinned to the top of the Telegram room. But you guys have also raised 384K so far without a contract being deployed, which is actually pretty impressive to see. So that tells me that you have a great community. There's a lot of trust of your name in the space. People trust you guys quite a bit.
Yeah, so that's not one thing I tend to brag about or something. Ego is never a good thing in space. But one thing that myself specifically and Neil specifically pride ourselves on our reputation. So as I said, we've had an array of community management and moderator jobs. So we have quite an important reputation, not to tarnish. So I believe a lot of that trust is not only being built by, the plans for the protocol, the steps we've taken, the things we've implemented, but also trust on the team. At the core, if you're a person investing in a project, right? You're not investing in the project, you're investing in the team. If you can see reliability and transparency within the team, then I think you're good to go. But yeah, no, I completely agree. The pre-sale raise thus far blew our expectations. Yes, we had a very ambitious 1.2 million hard cap, but in a realistic world, we never actually thought that we'd hit that. We set a mental soft cap so that the project can go live. There was never really any doubts that the project would never go live. The reason being is because everything that we've done in percentage based. So all of our plans, all of the investments have all been down to percentage based. Essentially, if we're going to launch at a low price, we have less funds to work with, right? If we have a less raise, but it's all comparative, right? Because if we had 1 million, then it's all just still on the percentage base. It just means more funds invested. But all of the remaining pre-sale tokens that don't sell out will be burnt. So that will be a massive kickstart to our burn mechanism. Our burn mechanism will only be funded, primarily through cash injections through the PXBB, but we'll touch base on that later.
Yeah, so thanks for that introduction. Okay, so you guys aspires to develop a large-scale ecosystem that is the future of decentralized finance. Okay, so if you guys can go ahead and just give us a quick breakdown, like few sentences, so that way the community understand what is the core objective of your project.
So the core objective is to solve the problems of sustainability, transparency, and greed in DeFi, and create a genuine passive income via multiple revenue sources and multiple different avenues in the space. This will be implemented by the Rebase token with sustainability variables, the NFT revenue share system, it's X shares, our own decentralized exchange with our own DEX, and a variety of other future developments that are to be announced in the future as we navigate through these different aspects of the early on days.
Perfect. And we will get through all the details of every single thing that you have. When I actually looked at your paper, it's actually very well thought out in a very strategic way, because oftentimes you see a lot of these high APY, right, projects. But the problem is that it produces too many tokens, but then there's nothing that back it up, right? So eventually you have too many circulation tokens out there, and it devalue the demand and also the chart and the price in general. But you guys figured out ways how to balance that all together to keep the demand going, but at the same time it's actually very strategic. So we will break those things down. But before we continue, Neil, we're going to be talking a lot, the term rebase coming up a lot. I know what it means, but could you explain to the community right now, what is rebase? What does it mean?
Yeah, so the best way to think about rebase is an auto compounding and no staking required mechanism. So on the most simple aspect, if you have one token today, it's going to basically be auto staked within your wallet, and it'll compound at a rate defined by that protocol over a period of some defined amount. So in ours, if you have one token today, and ours is 1.77% is what the rebasing is, then tomorrow you will have 1.0177 tokens in your wallet. So it's just a mechanism of accumulating more tokens. It's minting more tokens on the contractual side in order to distribute more tokens to those who own it. It's an auto compounding mechanism that works relatively similarly to that of a staking mechanism.
That's exactly it. So in a way, it's an elastic supply tokens, right? Also known as elastic supply tokens. So like kind of Neil said, what it does is that ultimately, I guess you can think of it as an inflationary token. Now, like I said earlier, other projects, they like to mint tokens and give it to you in a term of high APY to incentivize people to buy in. But the problem is over the long run, you have too many tokens going around. So ProtocolX, they actually thought all these out and come up with many strategies how to counterbalance that. Is that correct? Am I saying it correctly there, Neil?
Yeah. So I'll touch base on a few of these systems that we have in place, right? So the first sustainability issue we had or found with rebase tokens was the promise of that, invest $1,000, earn $1 million in a year. It's completely unrealistic. It sets false expectations, and not only does it cause long-term trust issues with the holders, it's just not great morals, right? So if you've noticed on our website, we don't sit there promising a high APR, a high APY. What we promise you is a set APR for your tokens to increase. We have many measures to counteract this, and we've introduced a few things that no rebase token has thought of introducing, right? So we have our SEM model, which is the sustainability emissions model. Every single month, on the start of the month, the daily APR drops by 10%. So at the start of the protocol, it will be a 1.77%. And by the end of the year, in exactly 12 months, it will be 0.5%. And that will stay at 0.5% until the point we can reassess, see how the year's gone, adjust our plans, and look forward to the future and see what we've developed and what we can build on top of, right? Not only do we have the SEM model, we have a liquidity management system model that we're going to be implementing from Solar Protocol. Solar Protocol are the ones that developed that. They will be adjusting it and integrating it into our contract for launch. We also have things such as in the future, we're looking to launch things called such as the treasury management system. Now, this isn't from day one. This is just something we're looking to do to future proof the token. As you know, over time, tokens hit a point where they've either run out of money because volume has slowed down, or they need to pay for marketing or partnerships, right? So what we're looking to do is integrate a bot where the treasury is basically run off AI. So it's not based off emotion or developer's choice or team's choice. What will happen is essentially when there's a day, if it does get a day of high volume, if someone purchases, say, $20,000, it will sell a small percentage of that buy to counteract against and also work with the liquidity management system. But that funds will stay in the treasury for a rainy day as such. So instead of in 3, 4, 5 months' time, us having to dump a large amount of tokens to make the token sustainable, we're thinking ahead and looking to integrate things to do that without us having to touch it. So in a way, that won't activate if someone buys $100 or sells any amount. It would be on specific large buys. That's undefined yet because we are still looking into that and fine tuning it. But there are many other ways we're integrating sustainability. I mean, the whole ecosystem itself works together. If you read the white paper and you start thinking about the emissions side and how they all work together to burn tokens and create a negative impact on emissions, it's what we're basically striving for, right? How to distribute as much tokens with a nice daily APR while also reducing the amount the amount circulating. So ways we're doing that is with the the X shares, which you'll be able to upgrade by purchasing keys with your PTX and then using them keys to upgrade your revenue share model. We'll touch base on that in a bit. There'll be other systems such as table games and arcade systems that we're looking to develop, gamification, where the entire ecosystem will work together and be included in that, as opposed to fighting the ecosystem against each other and making that ecosystem one thing better than the other. We'll be working that together to grow the entire ecosystem. Another thing we're really excited for, and one of the main features of ProtocolX, is our liquidity won't rebase all the time, at least. So one thing that people really overlook is if your liquidity rebases, essentially what you're doing is devaluing the BNB inside of the liquidity, right? So if every single day that liquidity is rebasing, the BNB isn't rebasing, only the Protocol X tokens are, right? So essentially what happens over time, the BNB becomes devalued by the amount of tokens in that. So what we're able to do is actually use the liquidity within the trading fees to inject into that and manually add liquidity if needed or add more tokens to it. Essentially, we're going to trial that and make sure that works efficiently based on our mathematical calculations and adjust as we go along. But what it does essentially is turning rebases off in liquidity not only stops the devaluation of BNB, it helps price stabilization, because if the price is decreasing, because the liquidity is decreasing technically or getting diluted, you're able then to stabilize the price more using the methods we have, such as liquidity management systems and SEM models.
So that's a lot of information right there, Brian. So I'd like to take it back for a bit, so that way our investors understand exactly what you just talked
Sorry,
about.
I do ramble a little bit. My apologies.
Oh no, you're good. You're good. I think you cover pretty much. So pretty much what you went through is that what Brian was saying is that when a token is giving you a compound in a way, or AKA rebasing, you pretty much get additional tokens, right? So they have a few strategies that to I guess take the tokens away at the same time, even though it's inflationary, but ultimately it becomes deflationary. Am I correct in saying that there, Brian?
Yes, essentially, yes. So instead of it being inflationary and diluting the liquidity, essentially what it will do is stay the same. So you're then able to stabilize the price over a long-term period rather than have the price the liquidity by diluted by the amount of PTX going in there. So instead of it actually being, manipulated by the rebase, you're able to then control it and stabilize it more.
Exactly. And that's a lot of the project's problem, is that they do not think of that system in place to counter that, right? The minting of the tokens with the high APY. So let's go back to the auto compounding protocols, where you say you guys are giving 1.77% daily in auto rebasing, or compounding, right? Now, as I look deeper into it, now that after 30 days, the APY would be reduced to 10% from the previous month, correct? That this will
Yes.
continue each month for 12 events. So in a way, this reminds me of the halving of Bitcoin. If you guys, understand how mining and the rewards work. So initially, ultimately, what are you guys trying to do? Is you guys trying to get adoptions right off bat with that 1.77%? But in recognizing that you cannot have too much circulation supply out there, so you will reduce it over time to ensure that the value of the token stay afloat. Correct?
Yes, so of course, if you're speaking on a realistic term here, you have to be realistic, right? Essentially, not many people are going to hold from day 1 to 365, right? It's very, very rare that that happens. So what we're looking to do is incentivize the new holders, the people who believe in the project early, while still being able to provide a nice daily APR for anyone who joins, say in 5, 6, 7, 8 months time. So what we're looking to do is we're focusing more on APR as opposed to APY. I think people get too mixed up and caught up in these crazy APY numbers, and they don't think about the actual logistics of it. A 500,000% APY is not sustainable, especially if you don't have millions of dollars pumping in from externally. So what we're looking to do is focus on the APR, change the rebase, moon boy mentality, thinking everyone's going to be a millionaire by the end of the year, make it realistic and actually make rebases sustainable as opposed to being unrealistic and setting people up with false hope.
That's exactly it. And we all have seen that happen before, right? With high APY projects. So, what Brian's saying is APY is pretty much you're compounding your earning, right, over and over. That makes it APY. Now, APR is pretty much a fixed annual percent. Okay. So it's more realistic on you guys' approach here. So actually, I like that a lot. Not a promise of high APY and you can be rich, a billionaire towards a year, which is unrealistic. All right, sounds good. Now, let's go to that. So you got the auto compounding protocol. Pretty much, you just buy the token, you let it sit there, and you just compound 1.77% daily in the beginning, right? Is that correct there, Brian? On you?
Yep, that's correct. You just hold in your wallet. If you guys, interact with the pre-sale and you get the pre-sale tokens, you exchange them for the main tokens. Once that goes live, our pre-sale ends tomorrow, and then they just auto rebase in your wallet.
Perfect. So now let's go on to the X share that you have, which is also known as your NFT. Let's go in detail, in depth in that.
Of course.
And how does that contribute to the whole ecosystem?
Of course, no problem. I'll explain the X shares perfectly. So we'll be the first rebase model to introduce revenue shares. Now, the revenue share system will be a passageway. You can see in our white paper. So the reason why we're using passageways is to future-proof the protocol, right? So everything that we do is to future-proof the protocol. So we're not setting ourselves with limitations. So essentially what there will be is 4 tiers. You have the common, uncommon, rare, and legendaries. Legendaries have no tangible value to them. You'll not be able to purchase them or upgrade to them. I'll touch base on that in a little bit. The way you'll get a common X share is by purchasing that with BNB. So that will be the only time you'll ever have to spend on an X share. You can buy as many as you want, right? These will be priced roughly at 1 BNB. We'll see how things go, and then we're either going to lower or raise that depending on how well the protocol goes. But we're still waiting on mathematical data to show the value of them, right? So from day one, there is a 2% buy and sell tax within the contract. A 2% portion of the buy and sell tax, that will automatically go to a wallet which will be distributed to holders. Now, these holders are the ones that purchase these NFTs. The way these NFTs will work, each tier will have specific perks to them. Some will receive higher percentages the higher you go, and some will have exclusive percentages and perks to them the higher you go. But the reason why our NFT system will work, and I'll tell you how now, is it doesn't matter if you're a whale or a small fish, right? We wanted to make everything exclusive. So when you upgrade these NFTs, the tier below it will burn. So if you start with a common and then you upgrade to an uncommon, that one will burn. And essentially what it does, it rewards people for going up a tier, but then also rewards the smaller fishes who can't afford to upgrade their NFTs. So the way the NFT system will work, right? And it all comes back to how the ecosystem will feed itself. So to upgrade the NFT, you'll have to use PTX. Now, the only way you're going to be able to do this is by using PTX to buy something called an X key. Now, an X key is the key to unlock the door and open the next tier. The reason why we have X keys is for future gamification purposes, and it's the same reason why we didn't just use a generic card or pass as the NFT and actually used an upgradable and a future-proof door or a passageway. I'm not sure if Wox is in the chat. Usually he likes dropping links and pictures because he's our graphics wizard and he gets everything going on that side. So the NFTs themselves, they're not actually built by any artist. These are all AI generated. So every single NFT is AI generated using code. I'll drop an example of a common X share in the chat now. That is a common X share. You can see the perks it has. There's 5,000 available, equal share of 60% of the X share tax and the base level of passive income. Once you upgrade this NFT to the next tier, brackets uncommon, your current NFT will be burned. Now, I touched base a little bit on how you upgrade these, but the way we're sort of building our ecosystem is by getting that sustainability, right? So with PTX, you'll be able to use PTX to buy X keys to upgrade. But what the best part about that is any PTX you use to upgrade will automatically be burned and taken out the ecosystem. So not only are you getting your revenue share model, which will have future gamification purposes, um, you know, revenue from outside the protocol, you're also able to burn tokens while you do it, which further stimulates the ecosystem. So what we're looking to build is ways that we can say, hey, you're a solid member, you don't want to dump your tokens, you can reinvest into the ecosystem without having to sell the tokens. And that's sort of the ecosystem that we're looking to create, right? We want to build a self-sustaining ecosystem that you don't have to essentially dump tokens and have to buy them with cash to grow within. You can use PTX and XSwap to grow within the ecosystem if you're a believer. I've just dropped the X shares in the chat now. You can see from left to right, you've got the common, the uncommon, the legendary, the rare, and then the OG. And these will all have specific tiers and different perks. So the legendary tier, you're not able to purchase this. There's only one way to get a legendary NFT, and that is simply by being a member of the community. And these will only be given out at specific events. They will not be sold. I'm going to drop what these NFTs are now and have what perks they have in the chat, if you just bear with me one moment. So these legendary X shares, there will only be 100 of them. You will not be able to purchase these. They'll only be provided for defined events. They will have a proportionate bonus from the Ego trading bot. We'll touch base on that after. And this will sort of be the governance token, right? So what we want to do with this legendary X share is not only reward holders with tokens, but let them have a direct say within the protocol, have one-to-one meetings with them, have group meetings with them, and make sure that their voice is heard, right? And we want to give these to people who believe in the project, people who work hard within the project, even if you're the best chiller or you help the most people that week. At undefined events, we'll be giving these away and giving them to people who truly believe. The only way to get one at this current time is buying a maximum wallet within the pre-sale and holding your original purchased PTX until the time of the airdrop. But I know that's a lot of information, and apologies if it was information overload.
Yeah, so right now you have 1, 2, 3, 4, 5 different type of NFT goes by the name X share in a way, right? So when a person buy a certain NFT, they earn a certain passive income, or I guess get a share of the revenue stream of the whole ecosystem in a way, correct?
Yes, so it will be a way for holders to earn from any PTX trading fees, any external revenue sources we have, and a lot of things that we want to just reward holders who believe in the ecosystem, and funnel them sort of that extra passive income without having to just rely on the PTX itself.
That makes sense. Okay, so now go back to what you said. So in order, let's say if I was to get a common passage NFT, right? And if I want to upgrade to the uncommon one, I would have to get an X key. Is that correct? So I will have to
Yes.
get a key to upgrade.
Yes, and the only way to purchase a key is by using PTX. So that you won't be able to buy it with BNB, you won't be able to buy it with BUSD. You would have to use PTX. So if you've joined the ecosystem just for the revenue shares, what that does, it still benefits PTX holders because if you want to upgrade them, you still need to use PTX, right? So what that does, it incentivizes people to hold PTX, grow their PTX, and use their PTX to further reinvest into the ecosystem rather than just dumping. So anyone that does reinvest, all of them tokens are burnt. We're also looking to integrate a percentage of all of them buys to go straight back to holders for an extra revenue source. But we're still finding ways every day. We're looking at ways to add further income for these NFTs. And essentially, it's going to start out from all trading fees, the 2% tax, and it will go directly to all of these holders. And as I said, these get burnt every time you upgrade, and they only get sent to the amount minted. So who knows? For the first couple of weeks, there may only be 100 minted. So that means, a massive portion of money is only going to 100 NFTs, right? So they over time it will grow. Realistically, the more of these that sell, the more that are in people's possessions, it means the larger the protocol is. So I believe it will scale according to size.
Okay. So now regarding the X key, let's say as the price of the PTX token, your native token goes up, to acquire this key, I mean, you guys will make that assessment accordingly and price that X key accordingly, right? So I guess what I'm saying is that once the price goes way too high, I mean, it's going to prevent people from buying the X key to upgrade the NFT. You guys will make that adjustment accordingly, correct?
Of course, if it becomes unsustainable and it becomes unrealistic to be able to upgrade them, what we don't want to do is, it to be extremely expensive to the point people won't get ROI. So, of course, yes, later down the line, if we did, if hypothetically Moon and the token was 10 times what it was worth when it first launched, we'd adjust accordingly and make adjustments there to make sure that it's still fair and people are paying X amount to upgrade.
And looking at your X key, and I see that you guys mentioned on here that there'll be other benefits as far as having access to the lottery system. When is that coming out there?
Yeah, so
Brandon?
that will launch with our XSwap. So XSwap is the DEX that we're launching. XSwap is our official DEX. We are partnered with Assured DeFi. If you don't know who Assured DeFi are, they are one of the leading KYC providers in DeFi. They will be the official partners on the DEX. Once that DEX launches, there will be a whole array of systems on there. That sort of touches on the sort of table games thing we do. We are partnered with Club Monte Carlo. We're looking to indulge in table games, host our own table games, and grow from there as well. So there will be many sort of things that you could do along the lines of X keys and PTX and ways we can incentivize holders to use it within the ecosystem and sort of lottery based systems. I mean, the lottery isn't something that we're too hyped about. I mean, essentially, and if we're being realistic, it's just a fork of the pancake swap one. I mean, every single lottery is, right? And that's just being realistic. We're looking to grow past that, create our own systems, create our own sort of tabletop games or arcade style games that we can integrate and build on the gamification side. But yeah, there will be a lottery. It won't be a major factor. I mean, it's something that we'll push and it will be fun. But in a nutshell, it is just, a generic lottery system. We're looking to build more than that and create a whole sort of array of things that people could do with the X keys, the X shares, and obviously the PTX token itself.
Now, I do have a questions regarding the NFT. So let's say, I buy an NFT, right? I don't want to buy an X key because I feel like there's no value. Just for example, can I just buy like an upgraded NFT itself? Like, I mean, how would you guys determine what is an upgrade?
Yeah, so with this, you're not going to be able to buy any of the upgraded NFTs, and I did that by design because it's going to facilitate another burn strategy for the token itself. So if somebody wants to get that higher pool of that revenue share system, in order to do that, they have to burn the PTX tokens that'll be determined via a price associated rate at that time, and that'll allow us to say, hey, you're doing us a favor. You interact with this contract and immediately sends your tokens to the dead contract, the main dead contract on BSC. And in return, you get this upgraded NFT. So it doesn't come back to us, it doesn't make us money when you upgrade, but it allows us to incentivize the community to help us with our various burn strategies. And in return, they get a higher revenue share and an upgraded NFT rather.
See, okay, that makes sense. Okay, awesome, cool. All right, so I think that's pretty much clear on what the X key is and what X share is. But looking at the system, I think I think you guys are probably very mindful, but it seems that the NFTs, they got to have a lot of I guess value. You guys hear me? Because sometimes I feel like my mic is like it freezes up. Do I
Yeah,
get
you're
cut out?
good. You're good.
Oh, okay. Okay, so it looks like you guys have around what 1, 2, 3, 4, 5, 6 now, 6 different NFTs. So I guess I think yeah, I think looking at the NFTs, and you guys are probably already mindful that these NFTs got to bring a lot of value, right, through developments and the rewards that the investor will be getting in order for them to really want to get the X key to upgrade. Correct? And you guys have other strategies in place to ensure that there's value in this NFT.
Of course. So obviously you can't shoot all your shots right out the gate, right? It'd be completely silly for us to stump any growth and ability to expand on these keys, right? So every key will have extra perks at some point. Every X share, sorry, will have extra perks. And the reason why we're not doing PTX directly to X swap, which we could do, and it'd probably be easier, is for future gamification purposes. Maybe further down the line, an X key could be the gamification token. Who knows? What we don't want to do within the space is limit ourselves. Now, adding value to the X shares isn't going to be easy. Let's not, let's be honest here. But what it does is, even if they are slow off the bat, and only, like I said, 100 NFTs are sold, then that's no loss to us. The holders are still going to benefit from them. The less people that own them, the more percent they're going to get, right? So what it is, it's our job, as you said, to add that value over the time. We do have some sort of strategies we're looking to implement. We are obviously pre-launch. The NFTs aren't going to go live for 3 or 4 weeks, so we still have time to add more to them. It will be a constant development. It's not something we're going to launch and go, hey, you guys are good, these are your rewards, that's it. No, everything within the ecosystem is built to be upgradable. There's a reason for that, because what we don't want to do is ever come to a point in our roadmap where we go, hey, this is a really good idea and will benefit the holders, and hit limitations because of the assets, or because of the contracts, or because of the abilities the individual part of the protocol has now hit a point of plateau because it can't be upgraded any further. What we want to do, and that's the whole reason, if you think about it, the mythology behind them being passageways, it's because you can always open up new doors to different opportunities, right? Now, that's the reason behind the doors. That's the meaning behind the doors. We could have just used a generic card or a generic model, but we use the door system to signify that these are something that will grow from. You're able to pass through the passageway. They will unlock future abilities. They will unlock future possibilities, airdrops, and that's sort of the things that we're going to look to apply. Build within gamification, have things that we can implement to the X shares and grow them, throughout the year. It's not something we're just going to launch and then be, hey, here's your X shares, because essentially, as you said, they will have no value. So we need to continuously add value to them, and we will be doing later on, obviously, in the development.
Perfect. Now, the max supply on each NFT, aka X share, is this something that is pretty much fixed? Correct?
Yeah, so those will be fixed numbers there for each NFT, and that allows us to prevent them from being too diluted, a little bit more of a reasonable expectation for each of them, and ideally there'll be just enough in demand to get those sold out there, and ideally people get some money in their rebases and want to put it back into the ecosystem.
Yeah, I mean, I'm looking at the max supply on each NFT or X share here. I mean, the numbers are pretty small, so which is great. I think that it's a good way to incentivize adoptions of buyers right off bat to take advantage of all the things that the rewards that you get, right in the beginning or right off bat. Okay, perfect. So as long as we're not minting, additional tokens, then I think we're good on that. Perfect. All right. So now let's go into you have the protocol buyback. Let's expand on that.
Yeah, so the PXBB system is, in a nutshell, instead of having a generic burn built into our code, which most protocols do, which technically adds no value, right? All it does is lower the circulating supply, but there's ways you can expand on that. By having a PXBB system, which is the ProtocolX buyback and burn system, essentially what it does, instead of just the tokens going to burn, it funnels the funding to it, the BNB to it too. So what that allows us to do, as you may know, if you've invested in rebase tokens, they usually have a insurance fund, right? Instead of an insurance fund, which can be manipulated, until the burn is at least 20%, or we'll adjust because our pre-sale hasn't sold out. So we'll be burning a large chunk, which is another point. Any tokens that don't sell out in the pre-sale will be burnt, which is another great fact. The PXBB system will be used solely for buying and burning. So apart from external revenue sources, which we'll touch base on shortly, I presume, the PXBB will receive 50% in BNB and 50% in PTX. Essentially, what that does is, instead of just the PTX being burnt, it allows us to buy and burn PTX to then grow the burn and create that sort of rising floor model. And that will work pretty well with the LMS system that we have planned to have going on to create that sort of extra sustainability.
Now, the PXBB, is that also known as your treasury? Is that what it is there, Brandon?
No, so they're separate. Our treasury is separate.
They're separate. Okay,
Yeah.
so where's the fund coming from? Where's the funds coming from?
So that'll be a tax built into the buy and sell tax. So you know how, for example, you have these insurance funds within protocols, right? A one to signify will be Seifu SIF, the Seifu Insurance Fund. So what this is sort of a price aggregator. So it brings in funds and it brings in cash to then stabilize the price. But what we're going to do is, instead of having that to stabilize the price, we're going to use that wallet. And Neil can confirm, sometimes these wallets aren't used because they're scared people will dump on them. But what we're going to do is strategically use this wallet for solely buy and burn. So every single token that is bought won't be sent to the treasury. It will be burnt directly. So what that then does, in a nutshell, is creates a buy that could not be sold into, creates a rising burn, but has value in that burn. Instead of just burning treasury tokens, which wouldn't be touched anyway, it's actually taking tokens out of the ecosystem and cash out of the ecosystem, rebuying into the ecosystem, and then burning. So that's one strategy we're using to improve the burn. Instead of just having a generic burn wallet or a burn built into the contract or a fire pit, we're actually using the cash within without actually affecting the treasury or having to buy from the treasury, which stumps the protocol's growth.
Perfect. So while we're on this topic, you know what? I want to go ahead and skip to the tokenomics really quick, so that way, as we go on, I feel like there's a tax dedicated to a certain wallet in a sense. So let's jump to the tokenomics right now. Did you guys hear the last thing I said on there?
Yeah, I got you. I didn't know if you wanted me to jump to it on there. Sorry about that. I was waiting for you to segue, but then I thought you cut out. I was like, oh no. So we're good.
I thought I did. It freezes up on me sometimes. So yeah, let's jump straight to the tokenomics, the tax breakdown. So that way we know exactly what is being dedicated to what.
Yep, that's right here if you guys could see it on the screen. So I'll go into that there.
Okay, so, yeah, go ahead.
Yeah, so basically we're going to launch with an initial supply of 50 million, and that's the initial token supply from the liquidity, the pre-sale, and the treasury allocation, and the team distributions. All those are going to be facilitated into that system there. Now, obviously, our pre-sale is about 380 something thousand, and we had a max allocation of $1.2 million, right? So anything that's not minted with that pre-sale wallet is going to immediately be sent to the dead wallet or just not minted in general. I'm going to see how the contract works with the devs when we get off the phone here tonight. But I feel like I'm either going to send it manually, or they just will only mint as much as that there is applicable, which I believe is going to be the way there. And then same thing with the liquidity. We're going to launch our liquidity on a partner that I cannot announce just yet, but will be announced tomorrow, where our initial LP is going to be launched. It will not be on PCS. It'll be another very large exchange with a lot of volume associated with it. So that'll be exciting to do. But of course, if we don't max out the pre-sale, then that allocation for the liquidity will then either be burned or just not minted in general. And then obviously, I just kind of went into there. Treasury allocation goes right to the treasury, of course. And the team allocation goes to a multi-sig wallet. And very quickly, if we might even be quicker than I expected, we're trying to get all team salary based off of a trading bot mechanism so that we're not selling tokens. This way, once I get that established, each member of my team, they'll have 200,000 tokens, less than one max pre-sale wallet, and then we'll send the rest to a burn wallet. So all those will go away from there too. But I'll continue.
Go back to that buyback and burn fund. So if you guys look at the screen right now, it does say that's 3%. So 3% on the buy and 3% on the sell goes to the buyback and burn. And it looks like Brandon said that it is being done manually, correct, Brandon? And that you guys will pretty much buy back and burn the native token, but also the X share as well. Is that correct?
That is correct, yes.
Okay, so ultimately, so these are the strategies that they have in place to make sure that it counters with, the minting of the tokens through the APR, which is the automatic compounding, in your wallet to make sure it's sustainable and the value continues to go up. All right, perfect. All right, so let's see, what do we have next after that burning here?
So one thing I'll touch base on, I'm not sure if I have already, is I don't know if we did. I can't remember. Sorry, we've done about 30 AMAs, so I've got a little bit of brain fog. But one thing we're going to be doing completely different to any rebase project out there is our liquidity will not rebase. So I believe I've touched base on this already. But essentially what that does is stops the dilution within the BNB, which also furthers the value of the token rather than depreciating. I just didn't know if I mentioned that already. My apologies if I have. I just thought I'd make myself clear that our liquidity will not decrease in value because it will not rebase.
Yeah, and I don't see a lot of projects actually doing that. This may be a new thing. Have you guys tested this out just to make sure that it's actually working like supposed to?
We've one of our guys who we spoke to about it for a good few hours had the maths and the basics surrounding it and proven. Obviously, we'll be testing it. If it does not work, we will obviously adjust. However, it seems to be proven based on the mathematics that were provided, basing it off other rebase tokens. And if they were to use that method, then it would cause a stabilization in price rather than a decrease in price. Because effectively, what you're doing if you have BNB and PTX paired, what you're doing, if you're letting that PTX rebase, you're devaluing the BNB, which means essentially every single day your liquidity is devaluing by 1.77%, right? If you take the rebase out of that, use the transactional tax from the token to manually inject into that liquidity, you're then creating a stabilized price floor rather than the tokens rebasing within the liquidity and building up and overflowing to the point where it devalues the token itself.
Yeah, that makes sense. I mean, if you guys able to pull that out, I mean, that will really create a stability within the LP, ultimately the price as well. So yeah, I mean, that's a great future there. All right, now you touch on the trading bot sustainability mechanism there, Brandon. Let's expand on that in detail and how does that play a big role as far as with the whole ecosystem.
Sorry, could you repeat the question? You cut out for me a little bit there.
You touched base on the trading bot mechanism that you get. Yeah, let's expand on that.
Yeah, so one of our major partnerships with Ego, one thing that we're doing within the protocol, which not many other protocols do, is from day one creating external revenue sources outside the ecosystem rather than just relying on inside of the ecosystem. So a lot of protocols from day one start eating their treasury, and that was one thing that Neil was touching base on quite briefly before, was that we're looking to build external revenue. So one of our partnerships with Ego is their trading bot. Now, their trading bot for the last 6 months has been proven that has a 20 to 80% return rate per month, with last month it averaging at 32%. So what we'll be doing is investing a portion of our treasury into that, into a low risk section on the bot, which averages about 20 to 40% a month, to create income from outside of the protocol. What that allows us to do is have a significant percentage go to buy and burn, have a significant percentage go to team pay, development costs, marketing costs. So essentially, without having to damage the protocol, we're still able to work while still, obviously, with full-time crypto, right? Our moderators have to be paid, the devs have to be paid. People don't work for free. But if we're able to bring that from outside the protocol, we're not actually affecting the protocol within, because essentially we're not eating it from the inside out. And that all touches base really where I said about protocols having to dump their treasury to pay costs. Essentially, from day one, we're going to bring external revenue from the outside in. There's other ways we're doing that with other investments. They will have medium, high, and low risk investments. We'll have some funds in high risk investments, obviously, to generate the protocol. But everything works on percentage base, right? So with our pre-sale, you can see we had a goal of 1.2 million. A way we future-proofed our pre-sale was by doing everything we have planned based in percentages, not based in dollar amount. Putting it into a dollar amount perspective, not only, if the protocol doesn't hit the cap, you're not able to pursue the same methods you had before. So putting everything into a percentage sort of breakdown in the back end for the team, we're able to then analyze with, say, hey, we've raised $380,000. We're able to put X amount into liquidity, X amount into marketing, X amount into external revenue sources, and still grow the project. So our partnership with Ego is quite a great one. I'm extremely excited. If you haven't heard of Ego, they're a great team. Their trading bot was built by one of their team members and was then brought into Ego for them to use. It's not commercially available yet, but we do have rights to use it on a partnership level, which is great because obviously Ego take a small fee out of our investment, but then we're able to generate that good passive income which can feed the protocol.
And the money is coming from the treasury, correct?
Yes. So as you know, we're in a time of recession, right? So what's the point of leaving money in the treasury for it to devalue? So what we're going to be doing is making the treasury work for itself. Reach out to safe investments, things like Freeway. Not sure if you heard of them. Other investments within DeFi, obviously partners, and make that treasury work for us without putting us at a risk. So obviously there'll be a risk management, and it will all be based on the amount of funds in there. But we'd never put the protocol in jeopardy or at risk for going bankrupt or as such, because there'll always be risk adverse investments and also funds left over in the treasury for specific allocations. But we are looking to make the treasury work from day one. I think what differentiates us from different other rebase protocols is these rebase protocols promise you something's going to come in 4, 5, 6, 7, 8, 9 months time. Instead, we're saying from day one, the protocol will actively be generating money, albeit it may start out smaller at first and then grow, but effectively the protocol will still be making money from day one.
Yeah, I have not heard of Ego before, but it seems like it's a business there itself. 20 to 80% proven revenue. Bots trading automatically. I mean, that's pretty crazy. That's insane. I guess the question is, now you guys will be. I'm not sure, the technicality of the bots and how the bots work, but is it input from the community as far as risk management portfolio? Like, can they vote on what portfolio to buy or the bots to trade, or is that something that's all done automatically?
Yeah, so it's something that I've kind of been making that final call on here as we do those different evaluations. But that will be what those legendary NFTs are out there, and for the direct input of the community. Now, like I said, I was a community manager previously, so was Bran, and I do totally understand the value of the community's input. But I also very much so understand that you cannot allow. There's maybe one or two successful DAOs out there, but a whole DAO system is very, very complicated, and you can get into trouble pretty quick if you allow the community to make all the decisions. But in my opinion, it would be a great idea to just get up on an AMA, share my screen, show different strategies, and say, hey, what are you guys thinking? Tell me what you think there, and they'll give me their input about what is on their mind on different steps and everything like that. So I think that's a good way, not super formal, but it is at least a method for me to say, hey, I care about your guys' opinion, but with that being said, we do have to make the best decisions for the project and for the business.
Yeah, I can agree with you more on that on the DAO. I think ultimately the DAO is kind of useless, right? Because pretty much it's tailored to whales, right? Yeah, 100% correct. But if you said the system is proven to be 20 to 80%, I mean, I don't think any investors will say no to that. So,
Of
so yeah.
course,
So
and
to
sorry.
recap, ultimately, you guys are using the revenue to pretty much ultimately buy back and burn.
Correct. Yep. We're going to use it to do buybacks and burns very directly, very quickly, very strongly, but also to facilitate other mechanisms, including, future builds. Like I previously mentioned, I want the entire team salary on a separate bot trading allocation. That way, we're not doing anything negative to the actual totality of the revenue system. I don't want anyone to make an excuse of, well, so and so was paid $10,000 a week, which is absurd, which happened in a very recent protocol when they went under. That's not going to be the case. We have to get our income because, like Brand said, a lot of us, if not all of us, are full-time crypto. So we have to get our income, but I want it off of the dime of those who are investing with us because that's just not fair to them. But it's also me proving my own strategy, saying, hey, if I believe in it for the business, then yeah, dang right, I got to believe in it for myself and for my team as well.
I love that. I love that. I mean, I actually that's pretty cool that you guys were actually going to do that, just to prove, like you say, your strategy that these bots are working and that pretty much you guys are getting paid with an outside source of income, right? Instead of from the project. That's actually pretty amazing. I would love to see that. I will be following you guys as well, just to see if the strategy actually does work or the bot
Yeah,
does
please
work.
do, because we will also be doing, I believe Neil said either bi-weekly or monthly, probably bi-weekly or monthly, to be fair, financial reports. Not in the sense of very in-depth. Obviously, we're not going to go into, hey, this team member earned X amount, this team member earned X amount. In a nutshell, we're going to be giving an overview of expenses. Essentially, our entire team, including all our moderators, external things, graphics, everything, our total weekly outgoings are just under about $9,000 at the moment. So if you take into consideration, that's about 14 people on payroll, and it's under $9,000. Whereas Neil just said, in certain protocols, you're looking at about, $8,000 just for one guy, or the CEOs paying themselves 10 grand a week. That's not the sort of people we are. We need to obviously make the project sustainable. If we can dedicate full time and be transparent about it. Neil tracked everything down to the last transaction, so everything will have sort of a monthly or bi-weekly roundup. We'll see based on how busy the protocol is, so people can have an actual overview to see what was spent where, how much things cost, and how things went. And I think what that does is just add an extra layer of transparency. You're not going to have people go, hey, where did $50,000 from the treasury go? We all have that there and say, hey, that $50,000 that you saw come out went into Ego Trading Bot. Here's the receipts. So we'll always have something to back up our plays. We're very excited to add that sort of extra transparency to the space. I think it's very, very rare. Obviously, we're not going to sit there and go, hey, Wox earns X amount of money, or that mod earns X amount of money. What we want to do is be as transparent as possible and say, hey, we're not taking $10,000 each a week out of this protocol. We are working, we are grinding. You can see the hours that we put in, and this is sort of the expensive that the protocol is running at the minute, while also, taking that external. If we can take that all external, then the project's going to be self-sustainable. If there's no funds coming out of the project, then it's just going to build, it's just going to grow. We can use that for large scale things like building, rather than having to pay for like marketing costs as such. But yeah, it is we're hoping to have that sooner rather than later, based on different strategies we're working on behind the scenes. But we're hoping within the first couple of months that will be completely external and everything will be run outside the protocol, based off of team salaries, marketing, and buy and burns and such.
Yeah, I think that putting the money to use from the treasury, if the system is proven, I think that's great for the project. So I'll be paying attention. I'll maybe sending you guys the USA crypto wallet and give it a shot as well.
Yeah, man, hey, I'm happy to do it. I love to share what I learned. And that's part of what we were doing here is we don't want to hold secrets either. So we find something successful. That's how we've done our partnerships. We want people to be able to participate. I'm shouting Ego from the top of the highest skyscrapers in West Texas, which there's not very many. But if I could, I would, just because I like what they do. They've shown it. I like the team. I've known the team for a little bit now, so we got to help each other out grow.
It's awesome, man. I don't know who Eco is, but I love to bring them on because it seems like as I like to see another developer vouching for another developer or the project. So that's really awesome to see. Man, the treasury, I wish you guys best of luck. I mean, that's an amazing return on investment, 20 to 80% a month. You put that in perspective of regular stock market, 10% a year, right? So that's crazy on your ROI there. Awesome. Now let's go to the swap. And now you guys touch on that a bit. It looks like you guys have a partnership, correct? And when can we expect that?
Yeah, so the swap here is going to be just in probably I'll estimate 2 to 5 weeks. So we had a pretty good team working on it there. They ended up not being able to accomplish the decks in a timely period, and instead of being professionals about it, they elected to wait, and then eventually now they are not able to do it. That's how we got this partnership with Solar. So I might have the Solar team work on it because we have official partnership on it. I also have another contact out there that could likely get it done in 7 to 14 days. But that being said, I'm trying to work with Solar and say, hey, we're an official partner. How do you guys feel about this before I make that move to have another company build something outside so that I can try to work within? If they don't mind it, maybe I can get it up sooner. But if not, I'm not really stressing. A few weeks here, even a month, I'm not overly concerned about that. So I definitely look forward to getting that live here sooner rather than later.
Perfect. All right. The next thing that I have on the list is the treasury, but I think that's pretty much self-explanatory. You guys will be using that to create, outside source of income, which is through trading bot. And I think we touched on automatic liquidity pool router already, which is something that I don't think I've seen it before. So I look forward to see that being implemented and work efficiently.
Yeah, and that's one thing we kind of pride ourselves on is our contract, in essence, is a rebase contract, right? So technically a fork. However, we're not just sitting there launching a fork and saying, hey, this is the token, go for it. We're actually adding to the contract, making it future-proof, upgrading the contract, and actually making that sort of change on rebase tokens rather than just saying, here's another Titano fork, let's launch it. Generating a bunch of hype, promising to make everyone millionaires. I'm kind of sick of that moon boy culture, myself, you get wrapped into it, the FOMO, the hype. But at the end of it, everyone just gets hurt. Everyone gets caught holding the bag. Everyone's at a loss. So what we're trying to do is actually make that passive income sustainable, change the rebase name a little bit, give it a good ring to it, and make sure people are, safe. And we're trying our best. You can't promise gains. You can't promise the moon. What we can promise is we'll try our best to make that daily APR as sustainable as possible by using all of our resources to do so.
Yeah, and that's what I get when I, look at your project and I see that you guys actually thought out strategies how to do that. Versus we do have projects that come in, promise very high APY or even APR, or even reflections, right? But 20%, 25% reflections of native tokens, but there's nothing really backing it up to make sure that it's sustainable. And you guys actually have thought all these out. So yeah, you're right, man. You guys actually have a lot of strategies behind it to make sure that the chart is healthy and there's value behind it, where the token's not diluted. Hey, Brandon, Neil, man, awesome presentation. Yeah, so if you guys don't have any further things to speak on, we're gonna go ahead and take questions.
Yeah, hey, I'm all for them.
All right, so with that, we're gonna bring Mike on, and he's gonna take some of the community questions, and we'll go from there.
All right, guys. That was a very good presentation there, Brandon and Neil. Thank you guys for coming out tonight. Before we get into a couple of text questions here, which it was a very thorough presentation, so a lot of these are basically already answered. I do like to ask if anybody in the community would like to voice their question. Please feel free to go ahead and unmute yourself and go ahead and ask your question. All right, let me grab a couple here. First one's from Alex Costa From what I read on your white paper, it stated that artists will have a chance to sell their arts in the PX NFT or
I'm
PX.
not going to cut you off there, but that person follows us everywhere and asks that same question. It has nothing to do with our roadmap. I don't know where they get that from. Sorry to cut you off.
Oh, no worries, because I actually didn't see it
Yeah,
myself in the
I
paper.
don't know who it is, but they come in every Discord and every Telegram AMA with the exact same question, and I don't know where they found that. I've asked them, but yeah, it has nothing to do with the protocol. So my apologies for cutting in there.
No, that's actually really good to know. Let's drop that at the name of the person as well, because we don't want that here either.
Yeah, that was from Alex Costa here too. He's usually actually very good. I see a lot of, copy paste here too, here and there, but he's usually pretty good for that. But yeah, I'll be watching for that. Appreciate that. Let's see. It's a little hard for me. I'm going back and forth on the phone. My laptop was having an issue. Let's see. I hope I say it right. This question is from Tucanley. In Q4 of 2022, you plan to expand your ecosystem. One thing that got my attention is the term gamification. What does it mean? Is it a P2E or what is it?
So essentially, we'll be looking at developing a P2E. We're currently in talks with people about developing table games and platforms as such, betting platforms and fun community platforms. We'll be looking to adapt the X shares into a sort of P2E system. That's why we have the X keys, so we can then future-proof that and integrate that into games. But more information will come on that later. We are currently working with partners to sort of build on that. And obviously, it's still early days, so we need to solidify more information prior to launching it.
Perfect. All right. We'll grab another one here. Again, I apologize. I'm going off two devices here. All right. This one is from Camouflage. I see your contract is audited, which is good. My question, however, is your staking contract audited and for the rewards? We understand the contract has to sell before the rewards to be paid. How do you deal with that with the investors when they see the sales on the chart from the rewards?
Yeah, so good question there. We did kind of go into earlier. Our contract is not under audit yet. It'll be deployed here probably later this evening. Then I send it over to CertIC for them to start their process. But that being said, there is no staking involved. I can say that. So there is no staking. You just buy the token, and then it's auto rebasing, it's auto compounding within your wallet there. Right at the beginning of this AMA, we went to a pretty good breakdown of that. But any contract that we ever develop and ever get into here and ever deploy will be audited by CertIC, and that's going to be how we roll with it. Keep it consistent and high.
CertIC, yeah, that's definitely assurance there. I'd like that. Let's see. Question also from Kama. Next question is, investors need to know how well you guys are pushing the project apart from AMAs. What other platforms are you guys seeking to increase volume as well as, well, not volume yet, but increase your user base?
So currently we're using a grassroots technique to, grow the platform by doing AMAs, doing promotions. At the current moment, it's doing really, really well. As you can see, we've raised $380,000+. Our next massive marketing push is our partners tomorrow. It will all make sense once it's announced, but we will be proceeding with some marketing with them. Hopefully in the future, upgrade our package with them. And then we'll be doing further marketing down the line. I've got a lot of marketing connections in the space, the trending, the CMC, all of that good stuff. Marketing for good rated CPM, pay-per-click ads, and banner ads. I've got all the connections there. So we have a strategy that we'll be looking to integrate. We'll also be doing sort of giveaways and, community hold events, the good stuff, to incentivize people to join the community, buy some tokens and get involved. But there's many, many things to come. I mean, marketing is a very broad aspect. Your token is only as big as your community. So a lot of the marketing within the DeFi space sort of relies on the community, if I'm honest with you. The community are the ones that generate the hype, get people excited. You don't, join a token. It can say you can win a Lamborghini. If there's no one in the chat talking, you're not going to buy the token, right? So help us help you. The community are doing great at the minute. Everyone's helping out. Everyone's tweeting. And we will continue to grow and continue to market.
I like it. Absolutely. I'll grab one more question here from the community. Let's see. This is a security question. Aside from your CertiK audit that you will be getting, what other security measures will you have in place on your contract, if you can touch on any?
Yeah, so the contract itself, we're going to try to get reviewed by another third party security team as well to make sure there's no backdoors. So there's multi purpose for why we're doing that. One is, like I said, security is one of the things that we're trying to change about this space in a certain aspect, but also it benefits the community directly and it also benefits me. I am the one that I'm putting all the onus on my shoulders. I am the owner, I am the contract owner, and then all of it's going to fall under my name, right? So we really have to make sure that everything is secure for those who invest into us, but also there is no one for me to blame except myself. So it is my job and my responsibility to get these security checks done. Now, of course, some of the largest projects out there, largest tokens out there have been compromised. Okay, so there's no immediate solution forever that could be done here and today. But that being said, we will continue to evolve over time, continue increasing those security measures over time so that we can try to keep up and keep ahead of the variety of attacks that do come out to the community. Like I said, I'm also a sure KYC, and I think KYCs are pretty important to the space, but contract security is also vital to the success.
100%. Appreciate that, Neil. I'm just going to grab one more quick one here from the community, and I'll kick it back to Seattle. I passed over this one from Gen Z GG. I'd like to know more details about the PXBB feature. Actually, how will the buyback mechanism be implemented in the token algorithm, and how much percentage will you use to dive into the buyback system for ProtocolX revenue? However, this will help. Do you want me to wait? There is a second question to that.
Oh, sorry, my bad.
Okay. No problem. Last part of that is, however, this will help control the inflation on PTX token at a satisfactory level, but cannot control the inflation only with buyback system. So do you hope to conduct some manual burns in the future?
Yeah, of course, I'll touch base on that a little bit. As I said, anything from the pre-sale will probably be burnt. There's many systems that we're integrating to, complement the PXBB. Now, the PXBB is a really good smart system as opposed to doing regular burns. There's also that tangible value, right? So if we're burning the half of that at this PTX, and then we're also buying and burning the BNB, that creates a tangible value to the burn wallet, right? Manual burns don't do much for the token, and I'll explain why. If you're burning tokens directly from the treasury, that is technically not circulating supply. So essentially, you're just burning team tokens, right? That has no positive impact on the token. Yes, it will rebase and more supply will go to the burn wallet, but essentially all you're doing is loaning your tokens to the burn wallet. There were tokens that the community had no access to anyway. There was tokens that essentially were already burned. So doing manual burns from the treasury has no actual tangible value on the asset itself because it was never in the system anyway. But buying and burning the token adds that tangible asset value because you're taking it from the ecosystem, buying it, and then burning it, which essentially creates that value to the floor, right? Because if there is that floor there and all of it had to be purchased, it now has value. If you're sending it straight from the treasury, it has no value because the tokens were never in the system anyway.
Very good answer. Yeah, appreciate that. All right, well, Neil, Brandon, appreciate you guys coming out tonight. I'm going to kick it back to Seattle. That's it for the questions. Now, guys, any questions I didn't ask or would still like to be asked, make sure you guys hop on over to the ProtocolX, hop in a DM or whatever you need to ask your questions. I'm sure they'll be answered quickly. And with that being said, thanks, guys, and kick it back to Seattle.
Thank you.
Hey, thanks, Mike. Thanks, Brandon. Thanks, Neil. All right, so just to make sure that the community is aware, the pre-sale is going on right now. The link is pinned on top of our Telegram room. Looks like kind of Neil said or Brandon said, they very ambitious at 1,200,000. But in this market conditions, they did raise $386,000, which is quite a bit. And it looks like you guys will move forward. You guys hit the soft cap, right, Brandon, Neil?
Yeah, so the soft cap is already hit. There's no minimum buy, essentially. It's 0.06 to buy. And there obviously a hard cap for each wallet is $15,000. we will launch. The reason why we will launch is because everything was done based on percentage. It didn't really matter what we raised, the token would have launched anyways. We would have just used everything based on percentages. The pre-sale is now live. There are some incentives. To find out about the incentives about the pre-sale, you can join our Discord group. We are primarily a Discord community, but you can also join our announcement channel on Telegram, which has all the latest updates for PTX. I'm not sure if you guys have the link for that, but yeah, you can join our Telegram. If you're not a fan of Discord, you can get all the latest updates on our announcement group. But we are in our Discord group all the time.
Perfect. Yeah, Brandon, Neil, pleasure to have an opportunity to dissect your project. Very well thought out project, a lot of strategies behind it. Actually, I like the project concept, and I love your strategies behind it to ensure it's sustainable. Yeah, if anything, if you guys have any words to leave us with, if not, we're gonna go ahead and do the prize giveaway.
Yep, hey, I just want to say thank you guys for hosting us. Please do check out our Discords where our primary socials are. Check out our pre-sale. Ask us questions. Our DMs are open. We'll be happy to answer them for you. And just shout out to you guys. Thank you for the time here today.
Yeah, thank you.